is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hey, Robert, how you doing, man?
Yes, and thank you for taking my call. I wanted to let you know that I've been a subscriber for a couple of years, just different members of your team, and I really enjoy it. But really the reason I'm calling is to express my sincerest gratitude for you providing that information yesterday on the small business grant. I'm a small business owner and primary breadwinner for my family, and if I can get that money, it's going to really mean a lot to my family. So
that's awesome.
Thank you for taking the time to do that.
No, well, listen, man, we appreciate you growling and prowling with us.
Now, Tom O'Brien.
Good afternoon, everybody. Happy Monday. Thanks for tuning into the Tom O'Brien Show with me. We kick things off on Monday, and markets continuing the run that we started on Friday. Higher prices right now, and you have an S&P coming up near 7,000 on the futures. We're up by 45 points or 0.6%. And how about the run since Friday? You check out the lows. How about 250 S&P points from that low early? Well, technically Thursday night, overnight into Friday. From where we are now, 250 S&P points. You know what will help the S&P? When you got a company like NVIDIA adding $500 billion in market cap. That's what you're talking about. Almost 25 billion shares, just shy of that number. NVIDIA up to 193.66 this morning. You're up by almost 3%. NASDAQ 100 up by 244 points. Let's look at some of the volume numbers. Now, Friday's bounce, we're talking about, not as encouraging as you may want. Today, it's not going to be the number either. You're at 423,000 contracts in the NASDAQ. You're going into 639. We'll have a big final hour, but that's not going to hit that number likely. And S&P even more pronounced. Okay, you're at 926,000 contracts. You're at 1.7 million on that bounce, and you're coming into selling of almost 2 million contracts. Dow, that was quite a bounce on Friday. Okay. So you say, the Dow is looking like the strongest, and the Russell's right there with it. Look at the volume. No drop-off whatsoever. So Dow and Russell leading the way right now. And look at this channel the Dow's in. From August, you bounce off that lower part yet again, and you check out the Russell. The Russell almost all the way from April. 2701 highs out there of 2749. Bitcoin up by 1,000. It's 71,300 right now. Quite the sell-off. In terms of where you were on Thursday night, clawed it back Friday, and we're right where we were Sunday night. Had to recalibrate where that 60,000 was. Thursday evening coming into Friday. Now I'll throw you a quick headline as we jump around, folks. Oh, come on. Fed's Waller says Trump-induced crypto euphoria may be fading. You think so? No shot on the president at all. You think the euphoria is fading? Maybe, possibly, right? And we're coming back. We test the bottom of this area. Pretty remarkable that you're bouncing on 60,000, which is the high from 2021 in Bitcoin. But how about that volume? We haven't seen volume like that in years, almost literally. You jump over to Ethereum. 2141. How about that for volume? We had an event last week, folks. All right, we've had some wild times in Ethereum and Bitcoin, but the volume we saw last week, a lot of pressure to the downside. Crypto, most of all. Speaking of downside pressure, dollar under pressure. Another move today, 96.82 right now. And yeah, look at the weekly. It's Monday, and you're taking out almost the entire week of last week, and there's your move. And that's what you're taking out. Put this thing on a monthly. You're just rolling over again with dollar weakness at 96.82 right now. And yeah, metal's finding a bid yet again. Like to see a little bit more volume on this bounce. Check out gold contract on the volume right now. Boy, look at this. Nothing today. 112,000 contracts in gold. 171 was light on Friday. We haven't had a real nice day of volume to the upside in the metals just yet. Gold, very light. Silver, oof. Look at this bounce we got going on, folks. 62,000. Jump over to platinum. All right, not as much of a drop-off, but yeah, no resounding bounce on volume quite yet in those metals. All right, let's jump over to some of the tech stocks. As I mentioned, you got NVIDIA trading higher. And look at how, you can make the case that we are just in this consolidation, man. And you're talking about a consolidation that's now stretching 7 months for NVIDIA. Something a little bit higher. Got out of that range up there in October. But look at that. Pretty well defined from about 170 to 195. You're trading at 190.55 right now. And that was a nice break with volume last week on NVIDIA to the upside. And fundamentally, part of the reason why NVIDIA is trading so high is because these tech companies are going to spend so much money on chips. Now, Google, trades lower last week on their numbers. Almost gets back the entirety of that overnight move. Check it out. Wednesday, you rip lower. You open at almost 300. You hit a low of 306, and we finished the day at almost 330. We're trading at 324 right now. But check out the debt that they are going to be pushing out, folks. Okay? Watch this. Alphabet embarks on a global bond spree to fund record spending. One of the bonds they're pushing out is a 100-year bond. In Switzerland and the UK. One of those. Maybe the UK. The 100-year bond, they're going to try that out. First time it's happened since the 90s. Google is set to raise $20 billion from dollar bond offerings today, more than the $15 billion initially expected. It's also pitching investors on what would be its first ever offering in Switzerland and the UK, and the latter would include that 100-year bond. Last week, as much as $185 billion. So the range they gave for CapEx was $175 to $185 for the year. My guess would be you're just going to see these numbers continue to ratchet up the way that has been. And some of these companies are already showing promise. Google's one of them. Meta is one of them as well. The company said investments are already boosting revenue. They're going to be spending the money, but they have to raise the money. And yeah, the hyperscalers. How's that for Google in the blue there? $200 billion. Now, I say they're going to go up. Like, even in this chart that we're looking at, they only put Alphabet at the mid-range of their estimate, which is 175 to 185. I would be surprised if Alphabet comes in anywhere near the mid-range of their CapEx at 180 when Amazon's already spending 200, right? Amazon's spending 200. They're in the blue, excuse me. Oracle's up there, small player still. But the two biggest, Amazon, Alphabet, you have Meta in the black, and Microsoft in the yellow. I mean, look how much more money. It's amazing when you look. Amazon and Alphabet almost double what Microsoft is spending, which is just a behemoth. All right, we'll talk a little bit more about Microsoft and Google when we get back. Microsoft getting a bid today up 3.2%. We're coming back with Steve Rhodes, folks. Stay tuned.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. S&P's right now up by 39 points. To talk about some of the market action, folks, we're going to jump over to our man, Steve Rhodes. You can listen to Steve's outstanding program, folks, The Trader's Edge, every market day right here at TFNN, live on Tiger TV, 11 a.m. till noon Eastern time, and his daily newsletter, folks, right on the front page of TFNN.com. You'll see Mastering Probability. All the newsletters we do, folks, come with a 30-day money-back guarantee. You hit that subscribe button. You can sign up for a month for $149, and you can add, folks, savings of $199 and $593 on the 6-month and the yearly, and they all come with a 30-day money-back guarantee. Steve Rhodes, good afternoon.
Hey, Tommy, how are you today? Good to be with you.
Good to be with you as well, man. We're easing back into a little bit warmer weather here in South Florida, Steve, but we got a nice little cold stretch, man. How you been doing?
I hate cold.
Yeah, I enjoy it only because, and then you get a couple weeks, you say, oh man, I know why I ran out of Boston. I just visit beautiful Boston, which I missed to get my cold weather fix and run back to Florida. Totally, man.
Yeah, I don't need the cold weather fix out there. Did you guys get snow flurries?
No, we didn't around here. I don't know if they got it maybe a little bit further north and maybe to the west, I think, maybe possibly, but we didn't. Yeah, I was trying to keep my, the kids would love it, of course, but not quite.
Yeah. Pretty extraordinary cold front. Like, they covered the nation. I mean, major. And we just have.
We got it made down here. I know. Don't get us wrong, folks. I see those, my mom's down there, Boston. My goodness, Boston. My sister up there, Caitlin, it's wild, man. What's it? 2 degrees feels like negative C, just wild. Yeah.
Well, I think that cold weather left only buyers in the market out there, because if we take a look at
looks like it, man, for sure.
Because if we take a look at the New York Stock Exchange, and that's the chart that we've got up on our screen here, and this was a snapshot from a few hours ago. On Friday, the New York Stock Exchange made a new all-time high for its advanced decline oscillator. Now, it had done that maybe about a week and a half before that as well. And it looks like today, Tommy, at least as of 2 hours ago, we're going to make another new all-time high. And it's really important. It's really important from this standpoint for our traders and investors out there to understand that breadth confirmation like that, it delays a risk of a pullback. It does not prevent the pullback, but it delays the risk. It delays the percentage risk. Let me give you an example. The odds of a 5% pullback after the New York Stock Exchange makes a new all-time high in the following week is less than 2%. In other words, there's a 98% chance that there's going to be less than a 5% pullback out there. Those are pretty good and reasonable odds. In fact, the I'm sorry, less than 2%. In fact, we can go out a full month, so 27 days. I'm going to not the 28th day, but 27 days. The chances of a 5% pullback are only 3%. So there's a 97% chance that we're not going to see that. Doesn't mean that it can't happen. It has happened before. Somebody might say, well, about how many instances did you check? And I would say the answer is nearly 1,200. I think it's 1,198 as of today, if this is the new all-time high out there. And so it's a pretty solid piece of information that's helpful. The times when this hasn't worked, it's typically been some type of exogenous event, COVID, so different elements like that. So it's a really good chance that we're not going to see much of a pullback, or certainly in the next month. And this is really helpful because there's a lot of people, Tommy, that are on the side of being really short this market out there. And I'm just sharing with folks that the statistics do not bear that out. If we take a look at I use volume. Your dad, let's make sure your dad's not listening to me talk now, because the way that the Qs make their bottoms are with volume. So this is a chart of the QQQ ETF. The bottom I've got right now, the yellow line is at 75 million shares. So it's kind of a benchmark that I use. The green arrows show you those different days where we saw that kind of volume inside the Qs. And they have all identified bottoms at that time. Is it a long-term bottom? Well, sometimes it is. If you take a look at the bottom back in April, at this stage here, we can consider that to be a long-term bottom out there. So that was another signal that we received last Thursday. Last Friday, in trading at the end of the day, the Dow negated its Rhodes. It's a sell the D point top. Where my cursor's at back here in the late part of January is when we got to sell the D point top. That's the C to D leg, that blue line there. It was negated on Friday. It's triggered one of Basil Chapman's wave number 7 Gs out there. That needs a lower high to confirm. So there's still the potential for the Dow to form a short-term top and pull back to that green oscillator and change line right around 49,680. The Dow last week negated its weekly TD9 count top. When we negate these topping signals, it really kind of tells you about where the momentum is. And as long as the Dow remains above its green oscillator and change line, currently printed at 49,739 for its weekly time frame, it's in full breakout mode. When we take a look at the monthly time frame chart, we're going to see a TD9 count top that is likely going to confirm at the end of February. It's only today, the 9th. But right now, it looks like it'll confirm at the end of November. And it will complete by the end of March out there. And because the top on a TD9 count pattern can take place, Tommy, on the bar following bar number 9. So we've got out here is question, do we have a top that's going to form right now? I say no. We got a weekly that negated its topping signal last week, as well as the daily time frame. So I believe that the monthly is going to move higher. When we take a look at the seasonal pattern, this is a 129-year seasonal pattern. This takes a look at all the midterm presidential cycles out there. And what I've identified for folks, the red vertical line is where we're at today. And what this suggests that we should see a top form right around March 20th. So we put that together with what the Dow was doing out here. This says to me, you know what? That March 20th becomes a really decent target area for us to start looking for some type of top inside of the Dow. Now, that top only turns out to be about a week and a half's decline, because seasonally speaking, over that 120-hour period, we've typically bottomed in March and then made the final high during the midterm electional seasonal cycle right around April 20th. And then we can see that price moves lower should price fall along this analog into the middle or end of September out there. So I think there's really good chance that we're going to see some type of top form in the March timeframe. But it's not now, and it's not now because we got that market breadth and everything else. Tommy, when I take a look at this set of charts, these are all of the monthly charts, or the primary monthly charts for the indices. If we take a look at the top, these are the ones that we can trade: the Dow, the S&P, the NASDAQ, and the Russell 2000. The Dow we've already covered is bar number 9 this week or this month. Same thing for the S&P. Same thing for the NASDAQ 100. Same thing for the Russell 2000. Bottom row, basically going to be the same thing for the semis. The same thing. Well, not the transports. So transport's a different animal out there. The AU, by the way, negated its TD9 count top on a monthly basis last month, Tommy. So for those folks that are holding GDX and have been dealing with whatever small amounts of pain or what have you. I don't think that the move to the upside in the XAU or the GDX is done. The New York Stock Exchange also going to complete confirm a TD9 count top at the end of February, complete that pattern in March. The Dow made new all-time highs today in terms of U.S. dollars. Everybody knows that, but it also made in terms of Chinese yuan and Canadian loonie. So it leaves us with partial confirmation of a global rally. We'd really like to see, Tommy, all of these charts trading at new all-time highs out there. The Dow is taking on its rising price channel out here and trade above a horizontal trading range line at 49,290. If we get above this level, then 52,813 becomes the next price target out there. And finally, last thing with regard to how indices are trading across the globe, we are in breakout mode in terms as far as trade above last year's high for the Dow, the S&P, the DAX, the FTSE, the SOX, the Shanghai, and the Nikkei. Tell me we've got a major global rally going on.
Pretty cool, man. I appreciate you covering the Dow. That Dow looks so strong. It does, man. Remarkable 50,000. We got to get those Dow 50,000 hats. But boy, that Dow right now.
We'll get the 60. We'll get the 60,000 hats.
Hey, as we know, it seems like we'll just accelerate, man. Numbers. The next 10,000 is easier than the last in those numbers. Steve, thanks so much, man. Look forward to the program tomorrow. Appreciate it.
You bet. Take care.
Have a good one. Folks, check it out tomorrow morning. You're talking about it. Tune in, Trader's Edge, 11 o'clock. We're coming right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. We get the S&P up by 33 points right now. NASDAQ up by 199. The Dow underperforming a bit, but yeah, how about that move on Friday? And you talk about a move with volume, man, 153,000 contracts. That was the most volume that we've had, folks. Only one day prior, January 20th on the sell-off, and before that, you're talking about all the way back to November 20th in terms of volume on the Dow. And yeah, you zoom in on what's happening with the Dow today. NVIDIA is a big one, but you're only talking about $190 equity. It doesn't have the same impact when it's not market cap weighted, it's price weighted. Microsoft, though, that's a big one, $400 equity, up by 3%. Goldman Sachs on a $944 equity, right? That's going to do it, up by 1.7%, in Caterpillar as well. Let's take a look at those two, Goldman and Caterpillar. So Goldman's up $15 today alone. These banks, man. Yeah, you get some decent action. You trade up to the highs of 984. You do it with volume of 13.5 million shares. You do 13.3 last week. You finished basically flat last week with a lot of volatility. That's by Goldman, up by $15 today. Caterpillar. I mean, look at this. Between Goldman and Caterpillar, those two stocks alone are adding $30 in price to the Dow. Look at this run on Caterpillar. And look at the extension. Oh, that is a good move last week. Look at that volume. Caterpillar. Let's put it on a monthly. All right, things dropping off a bit after their earnings in October. But, man, you look at that weekly. This is a nice escalation with continued volume. We take a little bit of a break during the holidays. In the last couple weeks, we've traded from 619 to 741 with volume. It's a strong-looking chart. Caterpillar up by 2.1% right now. All right, so we check in on those healthcare companies. Look at this thing, man. Yeah, be careful of this one. Hims. So the battle is on. They're saying that they're putting patient health and well-being at risk. Well, they say that of every knockoff, as in any type of generic. Hims is engaged in promotional campaigns that highlight its compounded semaglutide products, duping consumers and healthcare professionals as to the clinical benefits and safety of those unapproved drugs. I will say, just from watching all the ads myself, I can't quite keep track of what company produces what and what thing you're signing up for. And all the ads with Roe, with, is it Serena Williams or Serena, I think, and Charles Barkley, both with Roe. But Hims is offering, I think, just a knockoff of a compound versus the actual drugs like Zepbound and Wegovy. And really where this came to a head is that Novo has a Wegovy pill. And that's the next step, because up until now, I think you have to, most of the time, it's either an injection, they've just started coming out with the pills, or then they had a pen, which is basically a pill, an injection, in a pen form that's a little bit easier than having to use an actual syringe. And now it's pills, though. And as satirical as it sounds, Americans love taking pills. And this pill is probably the most important one you can take for your health. If you really can't get your weight under control, that alone can impact so much. And yeah. So just on Saturday, Hims said it would stop offering cheaper versions of a new Wegovy pill meant to fuel Novo's comeback. And they had a knockoff Wegovy pill a step too far. General counsel at Novo said, egregious and definitely a tipping point. And they're always going to say patient health, and there's a certain validity to that. You're not getting the same amount and the same Hey, anyway, I don't understand. I'm not going to preach to you about what a generic does versus the brand name, but there are slight differences that go into it. Hims had knowledge of the patent, which has been infringed since 2024. It argues the company seeking damages for reasonable loyalties from lost profit. Not what you want to see on Hims, right? You go from selling the drug to not selling the drug and getting sued for damages. And Novo, has seen their market cap fall from $600 billion to $227 billion in competition. There's Novo from 148 to 49. He had Eli Lilly out there. Look at this last week on Lilly. That's a lot of strength, man. It's a nice little consolidation on Lilly. Break higher. We're pulling back right now. Let's check out the daily. All right. We had a heck of a sell-off on Thursday. Bit of a bounce. That was a strong acceleration up for Lilly. All right, let's talk a little bit of Japan. Takaichi triumphs with Japan's biggest post-war election victory. The numbers are pretty staggering. If you look at it, of course, from the perspective of their government, but it puts it in perspective if you look at it from our government, if you ever had this type of majority in terms of what would happen. 316 seats of the 465. Yeah. 2/3 supermajority. So we jump over to the dollar yen. And you had Asia up big overnight, and that is yen strengthening. Okay, you go from 157.65 to 155.75. Nikkei up by almost 3.9%, had been up 5%. Hang Seng up by 1.7%, Shanghai up by 1.4%. All right, we'll see how the dollar moves. We're talking about, this is quite a move. Okay, we got a 2-week reprieve, but we are going back to lower prices in the dollar. And you're at below that 97 area, 96.82 right now. All right, we're coming up on a quick break, folks. I talked about it this morning, but we're going to talk a little bit more about this one because we have a new Fed chair coming in. Doesn't happen often. Okay, you're talking about potentially 8 years. Hasn't happened. And we got a new Fed chair, and we'll see what he has to say in terms of what he wants to do. But there's some big changes potentially brewing. See how it hits that market. And you're talking about, how about $6 trillion when you're talking about the Fed? There it is. We're coming right back, folks.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, folks. S&P's up by 33 right now. You got the dollar under pressure, down 80 pennies at 96.82. And yeah, so get your head around this one, because this will be interesting if this becomes the next forefront and where it goes in terms of the combination, okay? And you're talking about accords here between the Treasury and the Fed. And the headline here goes, Warsh calls for a Fed Treasury accord, stirs debate in the $30 trillion bond market. Well, you're talking about the Fed's balance sheet. In orange here, you have Treasury securities, almost $4 trillion, 4.2. And then we have mortgage-backed securities at $2.09 trillion, 6.29, almost, something like that, 6.2 trillion. Okay, is the number you're at there. Now, what they talk about is they go into, and I posted this one in the YouTube Tiger's Den earlier, folks, somewhere between the 9 o'clock and 10 o'clock program. Scroll up in the Tiger's Den if you're in there and you want to read this one. And I bring it up again because I've spent a lot today thinking about it. And the president makes public posts that he thinks the Fed should lower rates so that we can save money on the debt we are servicing. They say the bond vigilantes come for their price eventually, right? You don't necessarily get to pick the interest rate that you get to pay on your debt. Wouldn't that be great if you go to buy a car and you get to tell the guy? And yes, everything is leverage, everything's a negotiation, right? But what this talks about is that the balance sheet, okay? And what this talks about is an accord that was struck in 1951. And let me walk through real quick because, man, this is an important one. That pact had dramatically limited the Fed's footprint in the bond market. Now, this is all speculation, okay? And I paused there a lot, but man, this is an article. I read it like 3 times today and was digging into it outside of it. You really got to get your head in it to see the potential of where it could go if the Treasury, which is a cabinet position from the president, would almost have tacit power for approval or disapproval of quantitative easing or tightening. Okay, so think about that. That the Treasury Secretary, and again, all speculation, okay, but when you talk about an accord, you have the $6 billion securities, the 51 agreement brought to an end, okay, the Fed and the Treasury financing explicitly when it tied to their monetary operations to deficits, okay? And that was exactly what that agreement brought to an end. The Fed had capped rates. Does that sound familiar? Okay, the Fed had capped rates for short and long-term dated yields after the war because we didn't want to pay high interest rates for our high level of debt. This should catch your attention. Mike was saying it this morning. I think it should. And we don't know the details, okay? But that's why that agreement was put in place. Because by the Fed capping both short and long-dated treasuries, you had post-war inflation was high. The Truman administration agreed to let policymakers set the rates. But Warsh has said that the Fed has violated that principle with all the bond purchases. After the financial crisis, he's argued that these actions encourage reckless government borrowing, et cetera, et cetera. Okay, now here's what can happen. A new accord could simply spell out that outside of day-to-day liquidity management, the Fed would only make large-scale treasuries purchases with the Treasury's endorsement. That's quantitative easing, and that's quantitative tightening, and that's the balance sheet, okay? With an eye in halting the quantitative easing as soon as the market conditions allowed. And so, yeah, investors could read that he'd have a soft veto on anything they did. So imagine how that plays into things, right? If you want to tighten, if you want quantitative tightening, is the Treasury Secretary going to be okay with quantitative tightening? I'm not sure. What if that accord's there? Now, in the same instance, you could have a rollover of Fed treasuries from mid and longer term securities and bills to bills which are 12 months or less. So imagine you're going to have a Fed that's going to have control over lower term rates because they control the overnight lending rate. You're going to have the Treasury and the Fed, the Treasury rolling over all of our debt to a very short-term basis to not impact those markets on a higher scale. That would then allow the Treasury to scale back sales of notes and bonds or not boost them as much, and that would allow the debt management, and that would keep an eye on interest rates. Yeah. That one caught my eye for sure. And yeah, right now, you're talking about 58% in notes and bonds, only 4% in bills. T-bills could rise to as much as 55% of holdings. That's just one scenario. But yeah, you're at 4.4%. So watch this market, man. You know, we have dollar action right now. You have curve steepening, okay? And you have the potential for the portfolio of the Fed to get an entire shakeup here, and in terms of how the U.S. is financing their debt. The risk, investors view the Fed's actions as moving away from inflation fighting, right? Yeah, worst case scenario could see, of course, the safe haven. Anyway, that's an interesting one. If you get a chance, read it in the Tiger's Den, folks. I know I pause there often. I read that thing 4 or 5 times today and dug into it outside of it because that is something I think it's going to happen. And it's a great debate whether it should. Okay, I don't like the impact of having the Treasury involved with quantitative easing and tightening, because no politician ever wants tighter fiscal policy, right? That's the tough part about it when it comes to inflation. But yeah, managing our debt in a more effective manner, we'll see. S&P's up by 36. We'll come right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We get the S&Ps right now up by 31, up 0.5%. And, you know, one of the things that's remarkable, and everybody does this in politics, okay? But I always go back to the Treasury Secretary's comments that when Yellen was just adjusting the cadence a bit of the issuances and maybe not going up to the long end of things, that she was literally accused of, you know, pouring gasoline on a hot fire in terms of the economy and overheating it. Accusing her of using the department to bolster Biden by juicing the economy, had taken control of monetary policy through Treasury issuances and changed the cadence, which eased financial conditions substantially, incredible loosening of financial conditions, and that the worry, of course, is that you have a sugar high, and you have Louisiana Republicans saying that she was trying to induce a sugar high in the economy by doing that. And so that's where I lose the argument in terms of the reality of where we are, because that's, somebody walked me through the difference and how this is not potentially setting up. I mean, can you imagine? You have the Treasury having an accord with the Fed that the Fed will allow bills that the government will fund, and that we will be funding things on a 12-month basis. You're going to have bills go from 5% to 55%, right? That could be a problem, folks. And if you have then the Treasury having a tacit veto approval of if we ever have inflation, what needs to be done to bring that inflation down? And this is not a sell everything doomsday scenario. You got dollar weakness, we have inflation. The dollar's worth less. So assets, you better believe assets are a real deal. We're talking real estate and metal and even equities priced in dollars. Folks, thanks so much. Have a great night. Have a safe night. We'll see you tomorrow morning.